Hello, everyone, and welcome to our live. Thank you for coming on. Thank you for joining. If you're new to our channel, I am Michelle O'Connor, and I am your business growth advisor. And my role is to help you as a private practice owner to develop those plans and to put the things in action that you need to grow your practice so you can reduce stress, make money, and have systems operating in a very efficient way. Now, today we're going to be talking about a topic that I've realized is a concern or a challenge for those I serve. One of the common things I get is I am afraid of numbers. I don't like numbers. Numbers scare me. You just want to know that you're able to pay your bills, take care of your staff, and everything is okay. You'll move along until something drastic happens. And so I want to jump into our discussion for today, where we're going to be talking about financial mastery for private practice owners. So if you're joining live, please go ahead and say hello in the chat. You know how it goes when we're in the virtual world. We want to know that we're talking to real people and that I'm not just looking at my own face. So go ahead and say something in the chat so we know you're joining. And if you're watching the replay as well, I want you to go and make a comment. One of the things I thought of, as I prepared for this live was in my corporate world, in the time I was in corporate, I just could not understand why the CFO just got away with everything. That's our financial controller, right? And then I saw a post this morning and it kind of grabbed me. It was talking about research that was done on the successful participants in Shark Tank. And there were three consistent things that they noticed. One, they knew their numbers. Two, they were able to talk about what differentiated them from others. And for some reason, number three is slipping me right now. But one of the ones that jumped out at me was that they knew their numbers. And one thing that I want to just remind you of as you step into your role, you're in the position, you are the CEO, but I want to remind you as you step into your role more as the CEO of your practice, that the language that you speak is finance. So as the CEO of your private practice, the language you speak is finance. I'm going to say it one more time. As the CEO of your practice, the language you speak is finance. When you understand your numbers, you are empowered, you are knowledgeable, you can have objective conversations and make objective decisions that are better for your practice. And you're not just operating from how you feel, because our feelings can change and many things can affect our feelings. But when you are operating from a point of knowledge and you're clear about what your numbers are, you know you are making decisions about your practice. And remember, your business is one thing, and you are a person. You are separate from your business. Your business is supposed to be able to continue whether or not you're not there. So we're going to jump into it today. And my role is to really use a language that I think you can easily understand. If you have any questions, I'm checking the chat as we go through. Please go ahead and drop your questions and we will have a very robust conversation. And I hope I can leave you with some knowledge. Now, as you think about your practice, I'm going to be, as I was making notes and as I was going over my notes, even as I made them, and I was going over the notes today, I was thinking, it's better if it's illustrated. So as you think about your practice, I want to leave with you some key things that I really want us. You don't have to understand your entire financial statement. I'm not asking you to do accounts or anything like that. But I want you to be empowered with the necessary information you need to make the decisions you need for your practice to go to the next level. So let's jump right into it. And it's a public holiday for us here in Canada. It's Family Day. So if you're joining from Canada, I hope you got some time to spend with your family. So first things first, everything is a percentage of sales. When you make a decision about your practice, it's about sales. How much revenue am I able to generate from this activity that I'm doing right now? So always remember that as we go through. So I'm using this example just to illustrate a few areas of your profit and loss statement that I want you to pay attention to. So you want to look at your revenue, which is 100,000 here. And as you notice, the percentages are here. So this is the first area that we want to highlight. When you have your financial statements, ensure that you're asking for them and you're asking for the percentages as well. What does this do? While you may not be able to remember 100,000, and these are rounded numbers, you may not remember 100,000, but what you will remember is 100%. And the percentages aren't always rounded. It may be 25, 26, 27. You know it's supposed to be almost 30. So I want you to think about it from that standpoint. Ensure you're asking your bookkeeper, you're asking your accountant to give you percentages as you continue now to take your business more seriously. So you want to look at your revenue. You want to also look at your cost of goods sold. And we're going to go into it, just highlighting some main areas that we're going to be focused on. We want to look at what your gross profit is, your selling and your general admin expenses, and you also want to know what your profit is. So those are the areas that we're going to be focused on. If you're joining, go ahead and drop something in the chat. Let me hear from you. We're doing finance today. You know, every week we do a word. Our word today is finance because it's all about financial mastery and what we want to leave you with. And as we go through, if you have any questions at all, please go ahead and drop them in the chat and we will definitely respond. So revenue, your cost of goods sold. In this example, you can see that your gross profit is 50% of your sales. Now, how did they come up with that? We're going to be going through just to make sure that you're understanding. Now, your cost of goods sold, sorry, we said gross profit just so much. I'm on cost of goods sold. So your cost of goods sold is $50,000 and you have sold $100,000. So you've made $100,000 in revenue. Now, when you think about your cost of goods sold, that's all the costs relating to the service that you offer. I'm just highlighting the definition so that when we go into the example, you will be clear. So if you think about the service you offer, if I am selling this bottle of water, anything that goes into making this water possible. So the material for the bottle, the labeling for the bottle, you name it. That is what my cost of goods includes. We will talk about your private practice after. So in that example just now, remember sales was $100,000 and cost of goods sold was $50,000. So in layman terms, for you or for me, what it means is for every $1 that I sell, it costs me 50 cents to make it possible. So if this bottle of water costs $100, it costs me 50 cents. It cost me $50, to put it together for sale. So that is what it means. So you want to pay attention to that. So 50% of every dollar is the cost to deliver the service to your patients. And we're going to talk about it shortly as to how that relates to you. Thank you for joining. Please go ahead and say something in the chat. Let me know where you're joining from and what is your practice so I can actually use it as an example as we're talking through. So the next thing we're going to look at is your selling and your general admin expense costs. Now, that cost, as you can see here, is 10%. And it's 10% of your sales because we said earlier that everything is a percentage of sales. So it's $10,000. So that means it's 10% of the $100,000 that is your general expense cost. What is that expense? That expense is the cost of running your business. So if you think about your rent, your salaries, marketing, any kind of legal services that you may get, your consultants, you name it, anything that costs running the business, the desk want to be changed, you name it, that is what is included in that cost. So I want you to remember that as we go along and as we go into the example. So for these numbers that we looked at, remember your service revenue was $1. It was 100,000, but we're rounding it down to $1. And it costs you 10 cents to run the business. So if this bottle of water was being sold in a store, to have the store open, to pay for the utilities so that this bottle can sit on a shelf and somebody can purchase it, is costing me 10 cents of every dollar to get that done. These percentages are important because what will end up happening, you may not remember all the dollars and cents of the numbers that the revenue that you generate. But once the percentages are clear in your mind, we're going to talk about shortly how it is that you can use that in the decision making purposes of your business. So these were some of the selling and general admin expenses: salaries, rent, insurance, utilities, office supplies, marketing. Those are some of the costs that are included. So if you think about it, and I hope I'm not jumping ahead of myself because I know I have it somewhere in our document. If you think about it, if you know that 10% of my selling and general expense, that's I'm paying 10% of my revenue for that, then I know, okay, I can keep it at 10%, or do I want to increase it? Do I have room to increase it? Or is it too high? Do I want to increase my revenue? That is what you use that information to do. But first, you need to know what it is, and you need to know what percentages are included. I know sometimes one of the things a client of mine said, that she needs to remind her accountant that she doesn't work for the government, because what can happen is you may have your financial statements being completed in time to file your tax returns or to file your taxes, but you don't have it on a monthly basis to look on to see how your practice is performing and if it is generating the revenue that you need to generate, or even the profits. So in this case, in this example, you see that the revenue is 100. So everything adds up to 100%. You're using 50% of that for your cost of goods sold, then another 10% for your selling and general admin expenses, and you have 8% for taxes, and your net income is now 32% of your revenue. So it means that if you had $100 in sales, you are making $32. So that is what it means. So those are some of the key areas that I want you to pay attention to when it comes to your profit and loss statement. You may not know everything. You're not asking to deep dive in everything, but we're going to be going through now how you use that now in decision-making purposes and how it can help you to be a better CEO. So remember, the language that you speak as an entrepreneur is finance. Everything boils down to the numbers. You want to know what you're spending, and you want to know what is that generating. It may not be short term, because if you're just starting out, there's some investments that you make that you may not see the return until 2 or 3 years time. However, you should be able to look at your financial statement and answer the question: is my sales increasing? And are my expenses decreasing? So once you know what you're looking for and you understand what is included in it, you should be able to answer those questions. So let's look at this example. Now, this is an example with actual sales. Sorry. It's from an optical facility. So they're showing you, the different procedures that they offer, and they're generating $600,000 from that. Then you look at the expenses. The cost of goods sold, as I explained to you, is the cost in delivering the actual service. So because we're doing eye exams, you name it, the laser click fees, the contact lenses, frames and lenses, those are the costs. That's 100,000. And then you can see here you have your selling and your general admin expenses, your physician salaries, rent, insurance, staff salaries, utilities. All of that is here, and you can see what your expenses, your net income works out to be. So you're generating a revenue of 600,000, but your profit is $100,000. So this is what it looks like in percentages. So it's at 600,000, 616,000. Everything is a percentage of your sales. So you have your $616,000 for your revenue. Your cost to generate that revenue is 18%. And then your cost to run the business so you can deliver the service to your patients is 54%. And you can see your net income at the end of the day, 16%. Now, if we stay on this for a little bit, as the CEO of your practice, you can ask yourself a number of questions. What is included in my selling and general admin expense? And I encourage you to start from the bottom up, meaning you start from here, you know what your percentages are, does it make sense? Has this been the trend? You look at what others are doing. Is this the norm in the market? Am I off in some way? Maybe I need to operate a little bit more efficiently. So you may look at it and you're like, 54% it's costing me to run the practice. Let me look at what is included in that. Are there any costs that we can reduce? If you take on an additional expense, what does that mean? So right here, you can see some of the costs that are jumping out. Your physician salary, rent, staff salaries may be different because your physician may be persons who you're doing some revenue share with. Staff salaries are persons who you probably have full-time, your admin, that kind of thing, and your marketing. You probably can ask yourself, do I want to keep these here, or do I believe I need to be generating more revenue? So you can decide, okay, I am going to be requiring more of the physicians who are coming in because we need to increase the revenue from the service. So you have that information. The other thing that this does for you, at any point in time, without looking at your numbers, that I am already supposed to be generating 60% in net income from the sales that I have. So I kind of know where my revenue is going to be. So you don't need to guess, you don't need to wait, And if I am closing for one day because I'm going to be treating my team, this is what it means. So knowing your numbers helps you to actually make those decisions as you go along. So let's talk about your cost of goods sold. So remember, any questions that you have, please go ahead and drop them in the chat. I am checking, and let me know that you are here. Let me know that you are joining. And if you're agreeing, if you don't agree, if you're having challenges, if there's any particular area of your financial statement you're probably not so comfortable with that you would like me to highlight, please go ahead and share that as well. All right, so we're looking at your cost of goods sold. So as you can see, your cost of goods sold is 108. That's 18% of your sales. All right, I probably can work with that. What does this mean for you as a CEO? What it means is when you look at this 18%, if it's moving more than 18%, meaning it's going north, it's increasing, that there's something that's not happening. Either we're not managing our supplies, or the prices have gone up, you name it. Or as I said, prices have gone up. If your suppliers are increasing their costs, what the impact is going to be on your based on the revenue that you're generating, unless you change something. What do I mean by that? If you are generating between, say, your revenue is fluctuating between $600,000 and $700,000, and your suppliers are increasing the costs of the laser kits, the cost of your contact lenses, your frames and your lenses, if that goes up, your profit is going to reduce because you're now taking away a greater proportion of your revenue. You can do a few things. You can make a decision that we're either going to find a way to increase sales, bring more patients in, or we're going to increase the costs to our patients because your cost to provide the service to them is increasing. But knowing your numbers helps you to make those decisions. You can't just arbitrarily pick a number out of a hat to price your services. When you know what it costs to deliver the service, you are better able to price your services properly. And that is what knowing your numbers do. So when you're the master of your finances for your practice, you're able to make these decisions. So in this case, the cost of goods sold is 18%. Your 18 cents of every dollar goes towards delivering the service. Not so bad when you think about it, right? But remember, you have other costs for your business. So I want you to remember your cost of goods sold. You need to know what that includes. So when I work with private practice owners, one of the challenges that you find is this is something that they don't know. They just know they're spending money on things, but they don't know in total, or for this service that you offer, what's the cost to deliver it? They don't know that. And I'm sure your accountant, if you have one, may be providing it, but you probably need to sit down and have a conversation about what these line items mean, what the impact is on your business, and how you can make decisions from those numbers that you have. So let's go to sales and general expenses, or selling and general expenses. In this example, the sales and general admin expense cost is $330,000 or $331,000, which is 54% of sales. So more than 50 cents of every dollar goes towards operating providing a building, people, paying utilities, marketing to get a sale. That is what this means. So you can again have a discussion around it. All right, if it is that, let me dissect what my SG expense is. Am I spending too much on marketing, or am I spending too little on marketing? Do I believe I will have a better return if I increase my marketing spend? Those are some of the things that you want to look on. And when you're able to know what it is, because it's 54%, without knowing the details, every month or every quarter, when you look at your numbers, you are able to see, all right, it's trending around 50-55%. I am good. Nothing much has changed. You know that your team, they're managing the office supplies. You know that your marketing spend is generating what you need it to. You know that your physicians who you do revenue share with, they're bringing in the revenue. Your rent is not increasing. Now, when it comes on to the expenses to run the business, you also want to look at whether or not your rent is going to be increasing. What does that mean for you? It means that this may not be 54% if you keep your revenue at the same level. So remember, everything is a percentage of revenue, and everything you do is driving revenue. So there are some costs that you may not be able to change, you may not be able to touch. All right, your salaries. Each year you may be giving your team a salary increase, or every December you're giving a bonus. Include that in your number, so you know at the end of the day, this building that I have right here, that I'm using to serve person, that I'm using to generate revenue, it's really going to cost me 54%. So before you even go into the business, before you even start, before you decide to add another revenue item, another service, you already know, if I'm asking my patients to pay me $1,000 for this service, I am going to have to pay 54% or 54 cents from this $1 so I can deliver it. That is what it means for you. And you want to always have that in the back of your mind. And again, I will keep on saying it. The language you speak as a CEO is finance. And if you don't understand it, it's really important that you have a conversation with someone who can explain it to you so you can get it. So we kind of went through this slide just now, so we don't need to spend time on it. So I wanted to just bring back this slide here so we could look back at it. If there's nothing else you understand, you may not understand your balance sheet, you may not understand your cash flow statement, because that is also a very important financial statement that you need to know. You may not understand that, but these are the ones that you want to be very clear on. Know, what is it costing me to deliver this service to my patients? Know what the cost for running the business, what that cost is, so you can be clear what your net income is going to be. So it starts at 100,000, and as you deduct, you realize that your net income is 16%. So knowing that 16%, without even being aware of all the patients that have walked through the door, you know at the end of the year, at the end of the month, where your revenue is supposed to be. And you start here, and then if anything looks off, anything looks different, then you want to jump into, all right, let me look at all the line items under cost of goods sold. What changed? What is it that jumped out? Let me look at my sales and my general admin expense costs. What jumped out? What is it that is changing? So those are some of the things that I want you to pay attention to. It can be intimidating, and sometimes the persons who you have maybe preparing your statements, they are able to prepare it, but the in-depth conversation that you need, you may not have that. But knowing this, look at your numbers and work the percentages out yourself, even if you don't have it. And even if it's not in the direction that you want it to be in, you can go ahead and do that calculation. So for every dollar of revenue that you earn in sales, your profit is 16 cents. So if you are adding a new service and the service costs $1,000, you know in your mind already, I am supposed to be banking 16 cents from this. What does this mean? How many patients am I serving? How many patients do I need to serve for this to be profitable for me? So those are some of the questions that you want to be able to ask yourself as you go through. And that is what I wanted to share with you. I am checking the chat. I'm hoping that you found this useful. Remember, you don't need to understand your entire financial statement. And there are many, we could do a whole lesson on each line item, dissect them and go through and see what the industry standards are. But I wanted to provide you with the basic things that you should be aware of, the basic understanding that you need to have from your financial statement. And remember, the language you speak is finance. When we don't understand our numbers, we are not making decisions that are best for our business, and we end up feeling flustered and we end up feeling a little frustrated because we don't understand where we are. So where you want to start is with your revenue. You start with your revenue projection. And I have a very simple guide workbook that I created that I want to share with you. I actually shared it. I'm going to drop the link in the chat. You can go ahead and download it, because when you plan for your revenue, that's the first item, because remember, everything is a percentage of revenue. If you don't know what your revenue is, all the other numbers cannot be calculated. And this is a very simple guide. You have the workbook that you can use. You also have a video, because I did a live on LinkedIn and YouTube, and a lot of persons have watched it. So I listened to what my viewers were saying. I looked at my numbers, and you have that as a guide. And I also have a worksheet that is auto-populated for you. You don't have to worry about calculations. You just play with your numbers and it generates the information for you that you can use. So you can use that right now and go ahead and project what your revenue is going to be like. And that should help you to make some decisions for your practice, make some decisions for yourself and for your patients, so you're not always overwhelmed and not knowing where things are. Because one of the other challenges that I find private practice CEOs have is that you're able to maybe pay your staff. So you're taking care of your practice. You can pay all your bills. You are being paid, or maybe not being paid, but everything is being taken care of. And it's not until something goes wrong or there's some kind of drastic change that there is, oh my God, something is happening in the practice. Something is not working. You're also able to know if you're running a marketing campaign, you're running it for a certain period of time. When am I stopping? When am I expecting to see an increase in revenue and, business stabilizing? But you need to know your numbers first. So I wanted to share that with you. I dropped the link for the workbook in the chat. Go ahead and download it. It's free of cost. You're able to play around and do what it is that you need to do, so you can generate some information. And it doesn't have to be clear. If you're doing it for the first time, it's fine. You can review each quarter, make a decision. I am not going to keep this number. I want to change this number. Let me look what that would mean for my practice if I make some changes. So you're able to do that as well. So go ahead and download it. And if you have any questions, feel free to send me a DM, send me a message, or you can book a call on my calendar. So I hope you find this useful. If you're watching the replay, go ahead and send a comment and let me know what you think worked, what didn't work, what you'd like to talk about when it comes on to your numbers, and we will definitely have a live on it. So thanks for joining again, and have a wonderful evening or morning, depending on the time of day that you're watching the replay.